everyone. Welcome to the Stock Market Morning Prep video for Tuesday, December 2nd. We did get a little bit of a push to the downside in a very choppy session. Dow Jones, all across the board, were red. And we are coming into a seasonal trend to the downside where we come into tax selling, which comes in next 14 trading days or so, this week and into next week. And that's about what we have left of regular trading. And then we go into that holiday mode where mostly the markets are grinding higher. So just want you to keep in mind what we're looking for. And what I'm looking for is, and we're going to just do analysis off the indices, the 5 majors that we follow. And another thing, too, as you all know, the factor is crude oil. Crude oil getting decimated Thursday, Friday, and early Sunday morning. We did get a little bit of a short cover rally. We're down now a little bit. And I'm going to do a full analysis on crude oil of what I'm expecting. Just as far as, just to go over, no charts, I am looking for a retest of the low, at least one push lower. And if not the retest of the low, a higher low. If that's the case, then I think you can buy that for a trade. Remember, crude oil is in a massive downtrend, so this would be a counter trend trade. So I'm looking at that closely. Still needs a lot of work. But if we could take out yesterday's high for a day trade, I think you have a trade in hand here. Now, the better strategy would be is to obviously wait for that retest, because when stocks do trend lower like that, they usually do try to retest or at least make a higher low from the all-time low, and then move higher. So let's keep an eye on that for the coming sessions. So what do we have here? We have the spiders in front of us, the SPY, and we, as you can see here, we're looking for that 20-day tag. We're up a little bit, and remember, guys, don't let it fool yourself, because we are coming into some seasonal weakness as far as tax selling, and I want to stress that. Once the markets, they try to pop up and they fail again, keep an eye on it. Then I think you can get a decent short offer, at least for the next week or so. And then the markets get into grind mode, and we have that Santa Claus rally that we usually do have. And I wouldn't see why we wouldn't have it, as long as we get a little bit of a pullback. And then December and January, I'll put out some long-term outlooks of what I would expect for 2015. Again, just projections. I'll get that closer to the end of the year, okay? All right, so let's go right into the spiders. As you can see here daily, my first target's going to be that 20. It's not going to be that 204.26, and then it's going to be that gap up area here, and that'll be 266, which coincides nicely with that 50-day moving average right now. As you can see, we're still overbought. MACD, stochastics, starting to roll over, telling us momentum is waning, and obviously we have no volume. So this is looking pretty good. I wouldn't mind another bounce up, a lower high from this high, and then fail and take out that low. That might need another day or so, but I think that's what I'm looking for, to look for some sort of a swing trade lower. Now remember, markets just gap up and continue, then there'll be no trade to the downside, all right? Remember, we want a trigger, okay? Now let's take a look at the SPY 30-minute. As you can see here, we have the Bollinger Bands. I said energy's building. We don't know which way, and sure enough, it was to the downside. These are great tools to use when you have an idea where we don't know which way it's going, but when you have energy building, you can usually capitalize on it. But look what happened yesterday. We gapped lower. We stayed in a range all day yesterday. So it was very, very choppy price action. Markets did not follow through at all. So we're in this range all day, 30-minute range, and that's just terrible price action. It has been horrible price action in November, just with the indices running back and forth, really not going anywhere, consolidating mostly and trending for a couple of days. You could see this here really didn't go anywhere, but we did get that move lower. So Bollinger Band's going to need to tighten up a little bit, and then we'll see what the next move is going to be. Diamonds, same thing. We had that doji. We have another doji. So the diamonds actually held up well. I'm looking for that 20-day moving average right here at 175. And then, of course, that gap up area. That'll be the gap here. That'll coincide nicely with that 50. And that, of course, is 172.62. So you might want to write that down, put alerts on there. That's what I'm looking for. Yes, it does look a little big right now. But the first, it'll be that 20. And if it holds and we start to move up again, then obviously that second target is not going to be met. Now we take a look at the transports. Now we had worse than the numbers came out in manufacturing were worse than expected, obviously, and then we had a lighter numbers come out for the Black Friday, And of course, the transports got hit. And as you can see, it already met its 20-day moving average. And remember, guys, like I said, all these little candles, you get a couple of down days, and look what happens. It wipes out pretty much a good week and a half of trading to the upside on these little candles. So heavy volume, big distribution day, as you can see. And this is healthy. I mean, you can't just go straight up like this for 29 trading days. So the next target would be that 50-day would be 156.01 in the transports. Now, the IWM is a little different. As you know, the IWM's lagged all of 2014. And as you can see here, we're back into this sideways consolidation that we had in that gap up. We've already met our gap up, the gap area here for November. We've already made it in 2 days. Okay, so our next target would be this little cluster area of the moving averages of the 50 and the 200. So 113.75 would be that next target. And remember, if IWM start to sell off really hard and you get the transports to move, those are two of our leaders. Be careful. So let's just keep an eye on these two indices just to make sure we're getting confirmation that yes, we are indeed probably going to be in a mix of a sell-off. Okay, so just keep that in mind with the IWMs. Lastly, will be the Qs. And as you can see here, our Qs, technology didn't do well yesterday. Transports didn't do well, and they're coming into a little seasonal weakness as well. So Qs, watch out, look for that 20-day moving average, and then of course this area here would be that gap up. I'm going to be looking for the second target. So we have our first targets to the downside, and we have our second targets. And remember, we need a trigger. So let's see what happens today. Maybe we get a little pop up and fail early, and if they start to sell them early on, that's going to be your cue that we want to look to get short the market for today. Okay, have a great day. Hope everybody's doing well, and we'll speak to you tomorrow. Take care.